Welcome back, everyone, to The Deep Dive. Today we're looking into something, well, something that really affects all of us, right?
Yeah.
It's the evolution of capitalism and how that evolution is shaping wealth inequality. You guys sent in this article titled The Decline of Capitalism. And honestly, even just the author's background had me really curious. This is a former musician.
Yeah.
Someone who used to be, more into drum solos than financial statements.
Yeah.
And somehow they ended up advising venture capital firms. It's a pretty wild story.
It really is. It's that unique perspective, coming from outside of the traditional financial world.
Yeah.
That, I think, makes this article so interesting. It's like they're asking, hold on a second, does this system, does it actually make sense? Or have we all just kind of gotten used to something that's maybe, inherently flawed?
Right off the bat, they challenge this assumption that capitalism is like this brand new invention.
Yeah.
They draw this kind of surprising link back to feudalism, the system of, knights and lords and serfs.
Right. And the article argues that by understanding that connection, we can actually see how the seeds of modern wealth inequality were planted like centuries ago. They use this really interesting example of sharecropping
Oh, okay.
in the American South after slavery was abolished, right?
Yeah.
So you have black farmers who were technically free,
Uh-huh.
but they were trapped in this cycle of debt to landowners working for a share of the crops,
Right.
but never actually owning anything. And it's a pretty disturbing parallel to how I think many people feel stuck in these, low-wage jobs today,
Yeah.
despite working incredibly hard.
So we've got this, through line, right, from feudalism to early capitalism.
Right.
But the article really emphasizes that the real game changer was this shift away from land ownership to something else entirely.
Yeah, to money itself.
Money.
And more specifically, this idea of the velocity of money. So it's not just about how much money exists, it's how quickly it actually circulates. Think of it like this. If I pay you $20 for a handmade scarf, and you take that $20 and buy groceries from a local farmer,
Yeah.
that same $20 has created two economic transactions, right? Boosting that local economy.
Makes sense.
And the faster that money moves, the more opportunities are kind of created.
Okay, that makes sense. But how does that connect back to this idea of a system that's, rigged against the average person?
Yeah. That's where things get really interesting. The article argues that while everyone's told capitalism is about free markets, the government plays a huge role
Okay.
in trying to control this velocity of money through interest rates.
You mean when the Federal Reserve raises or lowers interest rates?
Exactly. Yeah. Oh, lower rates are supposed to encourage borrowing and spending,
Right.
which can be good for the economy overall,
Sure.
but it can also lead to inflation.
Right.
And that's where the article uses this, I think, really powerful analogy. Cans of Coke Zero.
Okay, I'm picturing, mountains of Coke Zero here.
Yeah.
Lay it on me.
Yeah.
How does that relate to inflation?
Okay, so instead of, thinking about these abstract numbers, they ask us to imagine wealth in terms of something tangible.
Okay,
How many cans of Coke Zero could your money buy?
I like it.
So they compare an investment fund, say in 2019, worth $100,000. That could have gotten you 312,000 cans of Coke Zero.
Wow, okay.
Fast forward to, say, 2025, that same investment, thanks to, market growth, is now worth 330,000 cans. So the wealthy investor is, winning, at least on paper.
But on the flip side,
A minimum wage worker in Iowa back in 2019 could afford 43,360 cans of Coke Zero with their, annual earnings.
okay.
By 2025, because of inflation and, stagnant wages, that same worker can only buy 22,170 cans.
Oh, wow.
That's a 39% drop.
So it's not just that prices go up, it's that the value of your work decreases relative to those who are already wealthy.
The article's point is that inflation isn't just this neutral force, right? It's a mechanism that transfers wealth upwards, and it's often happening invisibly, without people really realizing the extent of it.
This is starting to feel less like Econ 101 and more like a detective story.
Yeah.
We're seeing these hidden connections, these subtle shifts in power over time.
And speaking of historical shifts, the article takes us on this whirlwind tour of the stock market, starting with its birth back in the 1830s,
Oh,
dominated by railroads and banks. It sets the stage for what becomes this defining element of modern capitalism.
I'm ready for this time travel adventure.
Okay, great.
What happens next?
Well, the article jumps ahead to the Roaring '20s, a time of unprecedented economic growth and, widespread optimism.
Right.
Maybe a little too much optimism.
Mm-hmm.
Investing in the stock market became so commonplace that people were borrowing heavily, sometimes at like ratios of 1 to 3, just to buy stocks, fueled in part by this introduction of futures contracts.
Okay.
These contracts were initially meant to kind of stabilize markets,
Yeah.
became yet another avenue for speculation. They drove prices up, created this bubble.
And we all know what happens to bubbles.
Yeah.
Boom. The stock market crash of 1929 sent shockwaves throughout the world.
This crash really exposed the vulnerability of a system built on, excessive risk-taking.
Yeah.
And this disconnect between the financial markets and the real economy.
Right.
And it kind of forced this reevaluation of the government's role in regulating markets and, protecting people from financial ruin.
And that's where we see the government stepping in, right?
Right.
Enter Franklin Delano Roosevelt.
Right.
And his New Deal, this series of programs and reforms aimed at, rescuing the American economy.
The New Deal really marked this significant shift toward more government oversight.
Yeah.
Of the financial markets, most notably with the creation of the SEC.
The Securities and Exchange Commission.
Exactly, yep. And they also introduced social safety nets, like Social Security, child labor laws, and minimum wage.
Right.
It was a radical idea at the time, with critics calling it socialism.
But ironically,
that period, with all this government intervention, is often called the golden age of capitalism. Right.
it makes you wonder about how clear-cut these economic labels really are.
Yeah, for sure.
So we've gone from feudalism to the birth of the stock market, witnessed the devastating consequences of a crash, and seen the government stepping in with the New Deal.
Yeah.
What a whirlwind.
It is. And all of this historical context is meant to help us understand how capitalism has constantly been in flux, right?
Yeah.
Its relationship with government intervention, always evolving, just like the distribution of wealth within the system.
But hold on, because I have a feeling things are about to get even more complicated.
Oh, yeah.
As we head into the 2008 financial crisis and its lasting impact, this is where the article really starts to question whether capitalism is still serving its intended purpose, you know?
Yeah, that's a big question, and that's something that we'll dig into right after a quick break, so don't go anywhere.
Just kidding. We're diving right back in. 2008, here we come.
Ah.
Okay, so 2008, this is like the crisis where it felt like the whole world was holding its breath, wondering what was going to happen next. You know, the article calls this period like a real turning point, where those complexities of capitalism, those hidden connections we were just talking about, they really, came to light.
Yeah, what makes the 2008 crisis so fascinating and frankly terrifying at the same time is that it wasn't just like a market crash, it was like a systemic failure. The article really argues that the financial instruments themselves had become so complex that even, experts, people in the field, were struggling to understand them.
Yeah, they keep mentioning these things called mortgage-backed securities, or MBS. I remember hearing that term back then, but honestly, it kind of went over my head. What are those, like in plain English?
Okay, so imagine you're taking a bunch of mortgages from different homeowners and you're bundling them all together like a giant package deal.
Okay.
That package is then sold to investors as a mortgage-backed security.
Right. On the surface, it seemed like a pretty safe bet, right? Because you were spreading the risk across all these different borrowers. But here's the catch. A lot of these mortgages were what are called subprime loans.
Subprime, meaning like given to people who maybe weren't in a position to repay them.
Exactly. These were loans that were given to borrowers, maybe with a poor credit history, often with these adjustable interest rates that would start low, but could, skyrocket later on. The banks were essentially betting that housing prices would keep going up.
Right.
And borrowers would be able to refinance before those rates exploded.
But that gamble, it backfired in a big way, right?
Yeah.
When that housing bubble burst, suddenly, people couldn't afford their mortgages and those MBS packages became, essentially worthless.
It was this massive domino effect.
Yeah.
Financial institutions holding all these, what turned out to be toxic assets, started collapsing. You had Bear Stearns, Lehman Brothers, names that used to be synonymous with, Wall Street power.
Right. The entire, global financial system was teetering on the brink of collapse.
And then came the $700 billion bailout. The article calls this, socialism for the rich. The government essentially swooping in to save the very institutions that created the mess in the first place.
Right. The argument there is that instead of, letting the market correct itself, which Yeah, it would have been painful, but it potentially could have led to more sustainable long-term growth.
Right.
The government basically chose to prop up a system that was fundamentally flawed. They pumped money into the banks, hoping it would trickle down to the rest of the economy.
But did it trickle down? I mean, the article seems pretty skeptical about that.
Well, what we saw was a surge in unemployment,
Yeah.
people losing their homes,
Right.
this kind of growing sense that, the rules of the game were rigged.
Right.
The banks, with their bailout money, they were able to recover, but for the average person, it felt like a very different story.
Yeah, it's almost like they hit like the reset button, but only for, the people at the top.
Right.
Everyone else was left to deal with the fallout. And to make matters worse, the article points to another consequence of the 2008 crisis, which is this explosion of money printing.
The amount of money that the Federal Reserve pumped into the system after 2008 was really unprecedented. In 2006, they printed $148 billion. By 2012, that number had more than doubled, like to $380 billion. And this flood of new money had a major impact on asset prices, particularly in, housing and stock markets.
So while, many people were struggling to make ends meet,
Yeah.
those who already owned assets like stocks and real estate
Right.
saw their wealth, increase dramatically.
Yeah, and this is where that Coke Zero analogy comes back in. That flood of new money didn't just, magically create more cans of Coke Zero for everyone.
Right.
It just inflated the price of everything,
Yeah.
further eroding the purchasing power of those who are already struggling.
The article calls this a tale of two recoveries, right?
Yeah.
Wall Street rebounded, but, Main Street was left behind.
Mm-hmm.
And this leads to, I think the central question the author keeps coming back to, is this still capitalism?
Yeah, they're suggesting that what we're experiencing now is maybe something different.
Yeah.
A system where wealth is increasingly detached from these traditional ideas of productivity and, value creation.
Right.
It's less about building, businesses
Yeah.
and more about manipulating financial markets,
Right.
riding the waves of government intervention and exploiting the complexities of a system that most people, frankly, don't even understand.
It's a pretty, bleak picture. But the article doesn't end there, right?
No, it doesn't.
They also hint at, potential solutions, alternative models that could, address these systemic issues.
Right. And that's what we'll explore in the final part of our deep dive. So stay with us.
All right, so we've covered a lot in this deep dive.
Yeah.
From the historical roots of capitalism to, that financial earthquake of 2008.
Yeah.
Now, the big question,
Mm-hmm.
where do we go from here? The article paints a pretty bleak picture,
Yeah.
but it also hints at, some possible solutions, alternative models that
Yeah.
could address the issues, that we've been talking about.
Yeah. And I think the point here is it's not about throwing the baby out with the bathwater.
Right.
The article acknowledges that capitalism, in its purest form, it does have the potential to be an engine of innovation and progress.
Sure.
But what we're seeing now, I think, is a much more distorted version.
Yeah.
One that's become increasingly extractive
Yeah.
and frankly unsustainable.
Yeah, they use this term rentier capitalism,
Right.
where instead of creating new wealth, the focus is on extracting wealth from existing assets.
Exactly.
Things like, housing, intellectual property, natural resources.
Right.
It's less about building something new and more about, owning and controlling what's already there.
Yeah, think about the rising cost of housing in so many cities, right?
Yeah.
Is that driven by a genuine shortage of housing? Or is it driven by a system that incentivizes speculation
Right.
and hoarding of property? The article really argues that we need to shift our focus from maximizing shareholder profits
Right.
to a more stakeholder-centric approach.
Stakeholder-centric meaning considering the interests of everyone involved, not just those at the very top.
Exactly.
Right.
Workers, consumers, communities, the environment, they all have a stake in the economy.
Yeah.
And the article suggests maybe exploring alternative models.
Okay.
Things like worker cooperatives,
Yeah.
where, employees actually have a direct ownership stake in the company,
Right.
or community land trusts,
Uh-huh.
which can help to, stabilize housing costs and prevent displacement.
It's interesting because a lot of these solutions almost feel like they're, bringing back some of the ideas from the early days of capitalism.
Yeah.
Like localism, community ownership,
Right.
a focus on real value creation, not just financial speculation.
It's about redefining what success actually looks like.
Right.
The article argues that we've become so fixated on GDP growth as the ultimate measure of economic progress
Right.
without really considering, the distribution of wealth, the
Yeah.
environmental impact, the well-being of people.
Right. So, what can we as individuals do to actually shift the system towards a more equitable
That's the big
and
question.
sustainable path? I mean, the article seems to suggest that, it starts with awareness,
Yeah.
with understanding like the forces at play and maybe challenging the narratives we've been told about,
Yeah.
how the world works.
It's about asking those critical questions. Who benefits from the current system? Who's being left behind?
Right.
Where is our money going?
Yeah.
What kind of impact are consumer choices actually having? It's also about engaging in our communities,
Yeah.
supporting those local businesses, and advocating for policies that actually promote, a more just and equitable economy.
Yeah. It's empowering to think that, we're not just passengers on this like economic roller coaster.
Right.
We do have agency, we do have a voice,
Yeah.
and we can, collectively choose a different direction.
This deep dive, it's really been a journey, hasn't it? Through the complexities and the contradictions, frankly, of capitalism. And it's not about, simple answers or ideological labels, right? It's about understanding that historical context,
Yeah.
recognizing the challenges and engaging in, this thoughtful dialogue about the future we want to create.
I think that's the beauty of the deep dive, right?
Yeah.
It's not just about absorbing information.
Right.
It's about sparking curiosity,
Yeah.
challenging those assumptions, and ultimately, empowering you, the listener,
Right.
to become a more informed
Yeah.
and engaged participant in shaping, the world around you.
Absolutely. And if this conversation has, resonated with you, we encourage you to, delve deeper
Yeah.
into the source material. The link to the article is, of course, in the show notes.
Awesome. Well, thanks everyone for joining us on this deep dive into the transformation of capitalism. Keep those questions coming, keep exploring, and keep diving deep.